Hello, and welcome to this installment of our Industry Leadership Series. I'm Brian Dobson, Head of SPAC and Disruptive Technology Equity Research at Chardan Capital Markets. As always, I'll start the call on an interesting note with some very important disclosures provided to me by our compliance department. During this call, we will not be discussing Chardan research. Any discussions about research should be coordinated between a participant and their respective salesperson. Our compliance team has asked me to read this statement for the investor call. By participating in this call, our speakers attest that they have made Chardan aware of any potential conflicts, and they will not discuss any material, non-public, or confidential information that they are aware of or that may breach their legal, regulatory, or fiduciary responsibility to any parties. So with that out of the way, it is my pleasure to introduce Matt Schultz, Executive Chairman and Director of CleanSpark. We launched coverage of the company in June, and our research is available upon request. Matt, thank you so much for joining us this morning. Let's kick things off with some big picture questions, and then we'll delve in to some of the more recent events pressing the industry. Matt, as you look out over the global landscape, what do you identify as the core global megatrends that are shaping the Bitcoin mining sector, and how have you positioned CleanSpark to prosper in that environment?
Well, first, good morning, Brian. Thanks for having me. After that, the warning, now I'm a little bit nervous. I'm just kidding. So global megatrends, I'll tell you the thing that we see at CleanSpark first and foremost that's going to shape this industry is, quite frankly, access. You're starting to hear the retail firms and Fidelity and NASDAQ talk about providing additional access to Bitcoin through their platforms. And I think what we'll see is that as an increasing number of trusted sources provide access and availability to the crypto markets to their investors, you're going to see more broad acceptance, and I think that will obviously lend to a rapid increase in the stability within the space. With regard to CleanSpark, I think what we've done probably that's the most important to take advantage of that. With the industry itself is so capital intensive that you have to be properly structured and positioned. And one of the things that we've noticed is that there's obviously an increasing amount of scrutiny with regard to the energy aspect of proof of work mining. We engaged NASDAQ's ESG advisory group led by Ekaterina Hardin and her team about a year ago. And what they've assisted us in doing is building out and executing on a roadmap to ensure that all of the requirements for acceptance in the multiple different funds that have a prerequisite for an ESG initiative are met. We see that as a real important part of our business going forward, strategically and operationally, not as any type of a virtue signaling exercise, but because we see the need for Bitcoin to partner with the utility, to function better as a spinning reserve, to be a more responsible operator. And so I think that the position and structure and the strategy that we've taken and our approach, even over ideology, and that is that, we're really flexible about how we see growth. I think that's really kind of given us a leg up, if you will, in the macro trends that we see coming over the next 24 months or so.
Excellent. And I suppose within that context, how would you describe the industry's competitive landscape right now, and how has that shifted as the price of Bitcoin has declined over the past, call it, year or so?
So it's interesting. There have been a couple of different schools of thought. You saw the big splash that many miners made a year ago entering into the significant equipment order purchases. The challenge with that, companies like Bitmain that control 90% of the global supply of ASICs, they really kind of control what the market for Bitcoin mining equipment looks like. So there was a perceived arms race, Q4 last year and Q1 this year, and many of our peer group put billion-dollar orders together, which require a significant deposit. And with the space being so capital intensive, it really created I guess some opposition, if you will, between different miners that operate in the sector. You get the infrastructure light or asset light group that think that perhaps only owning equipment and finding places to plug in is the right strategy. Or then you have the contrary opinion, which we have at CleanSpark, and that is we want infrastructure first, and we prioritize that. What that's enabled us to do is take advantage of the market downturn, so we don't have exposure to those long-term contracts. We can be opportunistic in the spot markets, and we can continue to grow at the pace that best serves our shareholders.
Excellent. And as far as near-term obstacles are concerned, what do you think the industry really needs to overcome in, call it, the next several quarters, or longer-term obstacles, if you think that's more pertinent?
So I think we kind of have an optics issue with the merge on Ethereum having gone fairly smoothly. There's an increased focus on proof of stake, and the challenge that we see with proof of stake is that it centralizes more so a decentralized coin, or like in the case of Bitcoin, a commodity. And so with the focus on decreasing the energy consumption, I feel like that what's really important is to effectively communicate the fact that Bitcoin miners that actually partner with and work alongside the utilities are very instrumental in increasing the non-carbon energy mix that is part of the grid. What I mean by that, to kind of pan out a little bit, there with natural gas prices having done what they've done over the last year, I don't think anybody saw that coming, and so it's squeezed margins, and Bitcoin companies have struggled to keep up with Bitcoin prices dropping and energy prices going up. And so there's been less of a focus on the energy mix and more of a focus on energy cost. And we think that it's important to make sure that the energy mix and the way that we work alongside the utilities, effectively acting like a spinning reserve to incentivize more investment in renewables and non-carbon emitting power, is going to change the macro landscape for the U.S. power grid. I think that, obviously we evolved out of the microgrid space, and there was a book published back in 2015 written by Ted Koppel, who used to host Nightline, and it was called Lights Out. And what he theorized in his book was that there were 9 points of intersection on the critical infrastructure component of the domestic power grid that were weakness, and that if there were a coordinated attack, heaven forbid, cyber or physical or even EMP, that there could be parts of our country without power for months. And so what the conclusions in the book that were reached is that the domestic power grid needs to be more decentralized, needs to have a greater portion of renewables, but renewables can't stand alone. And we feel like EVs are only going to magnify that problem with the recent focus. So kind of to bring that full circle, a Bitcoin company like CleanSpark with $500 million on our balance sheet and $20 million in debt can sign a meaningful power purchase agreement with an energy developer to agree to take offtake when there isn't other demand. And that offtake, or that additional capacity, can help stabilize the grid, decrease congestion, increase the renewable energy mix, and ultimately work towards the infrastructure that the administration has prioritized in their most recent comments. So we feel like it's important Really long answer. Sorry about that. But to make sure that we bridge that gap and that people recognize that Bitcoin really is a catalyst for continued development of renewable and sustainable energy resources.
Yeah, I think that that's a very important point that may be lost on some interested parties in Washington seeking to regulate the business. There was some noise concerning additional regulation from the government in recent weeks. I suppose, to what extent does there need to be an educational process among regulators about the prospect for Bitcoin miners to achieve, call it, green energy outcomes, or to help to underwrite these projects? And is that already underway?
It's definitely underway, and I think education, as you mentioned, is key. I've had an opportunity to do multiple presentations. In fact, Assemblyman Van Eck from New York, he's a Democrat and has worked alongside the Sustainable Bitcoin Protocol group to help to educate members of their congressional representation about the positive impact that Bitcoin can have. I don't mean to make this just a CleanSpark conversation, but in the state of Georgia, when Southern Company, which is obviously the parent to Georgia Power, had financial difficulties a couple of decades ago, 49 communities in the state formed a co-op and began to buy power and to invest in resources that were decades away from being real. Well, those resources are now operating. We have the Vogtle 1 and Vogtle 2 nuclear facilities that were funded back in the 70s, came online in the 80s and 90s. And now Vogtle 3 and Vogtle 4 are coming online Q1 of next year or Q2 of next year. So that increases the nuclear capacity in the state. It's really important because of the fact that the competing utility, if you will, Georgia Power, is primarily coal and gas. So this co-op group of cities and municipalities now work alongside companies like CleanSpark. And we've been real active in M&A lately, working with cities like Sandersville, working with cities like Washington and College Park. And those utilities, those cities partnered with MEAG, which is the Municipal Electrical Association of Georgia. They formed this co-op, and now the energy that they sell to Bitcoin miners is a big part of their revenue. So the partnership that we create not only enables them to commit to larger amounts of clean, non-carbon emitting power, but it also gives the citizens of those communities access to power and based on volume purchasing at more competitive prices. So by making choices like that, or by entering in, we signed a contract with a company called Lancium, and Lancium is building a clean campus right now in West Texas. It's 100% renewable power based. We've got a fixed price purchase agreement. And the idea with Lancium is to partner with, and they've already done their large load study. So it's different from a lot of the large co-location or hosting type facilities that you heard about recently in the Bitcoin space that are having difficulty getting energized or having difficulty getting their ERCOT approval. Lancium's already been through the large load study. It's already approved. So working with Lancium, they can sign a power purchase agreement, 500 megawatts with CleanSpark. They can then take that to the bank to assist them in financing that project, which is meaningful in decreasing the congestion in the ERCOT power system, because that's been a problem. You have concentrations of renewable and limited access when it's otherwise needed. And, we've seen over the past couple of years the impact that that's had on the residents of Texas. So I think it's important to make sure that educationally we explain that we can basically drop a Bitcoin mining facility without regard to geographic restriction, as long as we have data, and create meaningful offtake for these new projects and act as that spinning reserve. And quite frankly, I'll be honest with you, Brian, I don't see 5 years from now that Bitcoin miners are always going to run 24/7. I think that it's going to be an active participation process in concert with the utility grids, that there's curtailment required when there's demand to help stabilize the grid and decrease the incidence of grid disruptions. And I think Bitcoin mining is really the only industrial player that can contribute meaningfully to that. I mean, if you think about it, you can't turn off an assembly line on an automobile manufacturer if there's peak demand on the grid, a traditional data center has to serve their clients. I mean, if all the selfies on Instagram were shut off for 3 hours in the middle of the afternoon because of grid demand, their business model wouldn't last very long. So, because we don't have a customer per se, and because of the fact that Bitcoin mining machines or ASICs don't have memory, we can turn them off and on. And we've secured all of our machines. We upgrade the hardware to enable us to overclock or underclock as energy conditions dictate. But then we also have a miner manager, a feature, a bolt-on software that enables us to curtail those. So take them from 3,300 watts or 3,600 watts down to 30 watts in a second. And so we can do that very rapidly. And companies like us can then be opportunistic with that time to service our machines or to do dialysis on our immersion rigs, where we filter and clean the immersion fluid and put it back in. So I think that the process of education, working with, as we've done, the Georgia House of Representatives, different legislative bodies, to explain the way that Bitcoin acts as an energy store and can be a great partner for the grid and can be that impetus for the increased investment in renewables, is really going to be critical over the next several years.
Yeah, there's tremendous opportunity for the industry to do good. To stabilize the grid and to underwrite these renewable energy projects. I'm really happy that you mentioned Georgia. Let's talk about your recent acquisitions there. Why has Georgia become an increased focus for you? What are your relationships like with the state and your power suppliers? And also, can you walk us through how this recent acquisition fits into your long-term strategic goals?
Yeah, absolutely. And thanks for giving me a chance to talk about it. So we've done actually 2 acquisitions in the state of Georgia in the last month. One will be closing here. It has an anticipated close date of, before the end of the month, and the prior transaction closed a couple of weeks ago. But we bought a facility in Washington, Georgia. Washington's a cool little community, 3,600 people. It was established in 1777. Interesting, when we signed our agreement with the city, it was the same facility or the same area that the documents were signed that abolished the Confederacy. So there's some major history in this little town. Interestingly, 98% of the doorknobs have fiber optics. So there's an emphasis on technology, but there's a tremendous amount of history. And this little community had been one of the early participants in MEAG, the Municipal Electrical Association of Georgia. And so they entered into partnership. The company that we acquired, Waha Tech, great group of guys, 2 gentlemen, Chris and Houston, really forward-thinking guys. They created a partnership with the city of Washington, whereby Washington could commit to buy more power from MEAG, primarily nuclear derived, and they would make a little bit of a spread on every kilowatt hour that Waha purchased. So it's meaningful for the city. It allows MEAG to continue to find demand for the new and oncoming nuclear, but also to provide greater access there. So they built a great business. They had a great model. The challenge for smaller companies like that is, when you're buying millions of dollars a month in electricity, the utility is going to want some certainty. So they're going to require deposits. And that for a smaller company takes a big bite out of your cash flow. CleanSpark has the ability to bond around that. We can put surety bonds in place, walk right in. And then because of the fact that we completed that transaction, so it's 36 megawatts live right now. And we've got, since we closed on the facility, we bought about 3,500 miners there. And then we added 16 more truckloads of miners that we bought in the spot markets and that had arrived at our facilities in Georgia. So we now have about 10,600 miners actively operating, but it's the right relationship, because the power producer is MEAG, that I've continued to talk about, which is nuclear. And then it's meaningful for the city because the city generates revenue. So when we went in and negotiated that agreement, the mayor's there, and we get an invitation to go to his house for a barbecue and to hang out. The city council is there. There are representatives from the Georgia State House of Representatives that are talking about how important Bitcoin miners are to the stabilization of that infrastructure. So we've got a total of 86 megawatts of capacity. There is 50 megawatts substation being constructed right now. Then we acquired the facility from Mawson Infrastructure that will be closing shortly. Same story, a great partnership with the city of Sandersville, Georgia, primarily nuclear power, and a terrific workforce and access to that surplus capacity. So we walked in there, picked up 80 megawatts. It's important to note that there's a little nugget buried in our 8K filing on the Mawson deal that we didn't publicize real heavily, and that is that James and Liam that started and operate Mawson have done a great job in Georgia, but they also have two other facilities totaling about 220 megawatts in Pennsylvania, and that's all nuclear power, and it's really favorable rates. As part of our transaction in Georgia, we executed a right of first refusal to acquire that facility as well. So it certainly factors into our growth plans going forward. So Mawson is 80 megawatts. There's a 150 megawatt substation being constructed on site. So that'll be a total of 230 megawatts. They've got a terrific workforce in both the communities I mentioned, as well as our other facilities in Norcross and in College Park. But what's important to note, not to go too far off the rails from a technical perspective, but Georgia is at sea level or close to it. So the air is more dense in a lower elevation. There are Bitcoin mines that have been built 15,000 feet elevation in Peru, and you can't cool them. Even if the air is cold outside, there's not enough density to remove the heat from the chipsets. So the increased density in the air is a real positive in the state of Georgia, different from Texas or anywhere else. Another factor is, as human beings, we feel humidity as something that adds heat to us because our bodies don't use the evaporative cooling to be able to cool. Well, chipsets don't sweat. So humidity and increased density in the air make it more effective for cooling and removing the heat from the chipsets that allow us to operate in our air-cooled environments more efficiently than we could in some other places. So I think when you look at the ability to operate there year-round, the partnership that we have with not only the city of College Park and the city of Norcross and the city of Sandersville and the city of Washington, but with Georgia Power collectively and with the Department of Energy in the state of Georgia, MEAG representatives have told us we're their single biggest customer now. So what that means is if I'm the power generation that controls all of this nuclear power, I'm not going to really want my largest customer to be curtailing to create that oversupply on the grid. So CleanSpark and MEAG, as well as all these communities, are incentivized to work together to create favorable climate for the demand for the energy, as well as the supply of the energy and the price of the energy that allows us to operate as much in uptime as is possible to take all of that load, but then have that instant ability to curtail in the instance of demand. So we really feel like it's a wonderful climate. We've been really well received, and we have 4 facilities there if you include Sandersville, and the city of College Park will run 24 hours a day, 7 days a week. It's fixed price, 2.85 cent power, very favorable terms. A couple of our other facilities may curtail for 8 or 10 15-minute intervals throughout the day, just based on demand and pricing. Because we don't do co-location hosting, we own the facilities, we have the flexibility to be able to make those decisions in real time to make sure we're maximizing our profitability, but also being the best partner to the grid that we can.
That's excellent and very exciting regarding your right to first refusal for the facilities in Pennsylvania. Also found that commentary on humidity and air density very intriguing. Certainly, that's something we're going to have to take a look at when evaluating other projects. So Do you think it would be fair to say that you might remain opportunistic, particularly while Bitcoin prices are depressed, and seek out other, call it bolt-on acquisitions like the one that you alluded to in Pennsylvania?
Absolutely. I would think without exception. And it's interesting. I spent last week at a conference in New York City, and I met with a number of different institutional investors, analysts, banks. And what I found intriguing is all of our peer group is talking about being opportunistic during this crypto winter and taking advantage of the downturn in the market. And yet outside of CleanSpark, there's no M&A transactions that have been taking place. So I think that the challenge is people are standing on the sideline waiting to call a bottom. In the meantime, we've seen how violent Bitcoin can react in terms of price. And I think if you're not thinking strategically and being opportunistic today, the chance to do that tomorrow may evaporate very quickly. So
Yeah,
we have a number of lines in the water, so to speak. We're active even today in negotiation or dialogue with other operators that have created terrific facilities that, due to the financial constraints, their inability to purchase power at the same process or same rate we can, their lack of access to institutional capital. I mean, we've spent, gosh, I'm around numbers here, $400 million in the state of Georgia, and two of our larger shareholders, BlackRock and Vanguard, manage funds that are primarily driven by the requirement to meet certain ESG initiatives. So companies that don't have that clear roadmap don't have access to the institutional capital, don't have the flexibility to grow like some other companies may during these challenging times. So we have definitely been opportunistic. I mean, you and I started talking, I guess, almost a year ago, and you did a lot of work building your models and initiating coverage. But a year ago, CleanSpark had 1 exahash, and we've given guidance that by the end of this year will be 5 exahash. I think that using this market opportunity as a chance to grow and grow wisely, we've made transactions that, we've used Bitcoin as one of the levers in our capital management strategy. We've used a little bit of debt. We have a piece with Trinity that's asset backed, $20 million facility, and we've used equity. And what we've said very clearly is that if we choose to use equity in this climate, it's got to be instantly accretive. So we used a little bit of equity in a transaction when we bought the facility Waha Tech in Washington. I think we sold about 14% of the company and increased our hash rate by nearly 50%. So, when we say instantly accretive, that's the kind of stuff we're talking about. Yes, the price of the security is down, but the corresponding price of infrastructure and equipment is down farther. So, these rigs that we picked up in the Mawson transaction at $17 a terahash were $100 a terahash in January. So, I think it's all relative, and we have a fantastic team that, every transaction we look at there's a real in-depth analysis and a model built surrounding that, with an eye to, 2024, we go through halving where the block reward gets cut in half. And so we need to maintain the ability to be profitable through that process. So, this crypto winter, so to speak, we put up $31 million last quarter at 15 and with $15.4 million in adjusted EBITDA. So, aside from some non-cash stuff that we've been working through, it's still a tremendously profitable time. And we absolutely plan to continue to be opportunistic.
Yeah, the growth and efficiency at CleanSpark has been tremendous. And I would like to point out from our team's point of view, the rigs that you acquired from Mawson, not only were they a lot cheaper from a year-over-year basis, but also substantially discounted to the going rate of the market. So we were very excited about that. We have a question on sea level, humidity, and an operating environment from the audience. And the question is, what other areas are exposed to those type of environmental or positive environmental situations?
That's a fantastic question. So there was an article, I don't remember if it was on the Block or CoinDesk yesterday, that talked about Bitcoin miners moving to northern climates that are cooler. And just yesterday, I was with one of our equipment manufacturers, and we were talking about life, health, and safety protocols and the way that miners operate and the proper type of infrastructure. Little things like the mobile mining units that people are building. It's great to configure a shipping container into a mini data center, but it still becomes a building that people can go into and go out of, and it's fixed to a utility. So by definition, it's a building, and they have to meet code. What we're seeing is that there are miners that are placing rigs wherever there's cheap power without regard to altitude, density, the ability to cool, or life, health, and safety protocols with regard to the infrastructure. So what we've been actively looking at are climates that have access to nuclear or strong energy mix, that are high humidity, low altitude, or coastal regions, because it does play such a large factor. We have a significant portion of our College Park facility that I mentioned. That facility can run 24 hours a day, 7 days a week, 365 days a year, even in the hot climates of Georgia, because of the fact that we've designed our systems. It creates almost negative pressure by the way that we pull air through the structures. The little fans on the miners don't do the work. The big fans on the boxes do the work. So by having more humidity and more dense atmospheric pressure, the ability to remove heat from those heat sinks is greater. Same thing would apply in PA. Same thing would apply in North Carolina. Same thing applies in Tennessee. The challenge we're seeing in Texas is that there are demands on the grid. Now, obviously, we have a 500 megawatt commitment with Lancium there. So we're very bullish on Texas. The challenge is the cooling environment is such that there are miners that are forced to curtail due to the fact that it's a drier, hotter climate, and there are periods of time it's just inefficient to operate. And I'll tell you why. An S19J Pro is a 3600 watt rig. At 85 degrees plus ambient temperature in a dry climate, you can add another 600 watts onto that consumption. So when you're putting, a megawatt is a lot of power. And when you're building a 50 megawatt facility and you're factoring for infrastructure and air conditioning and all of the other loads, and then your miners go up by a factor of 20%, now you're overloading your existing infrastructure. So you're forced to curtail as a result of environmental conditions, not even factoring in utility rates. So we're targeting places that have an increase in efficiency that enable us to put this more efficient kind of system that we built of our mining containers, or also find opportunities to strategically deploy immersion cooling. That's something else we haven't talked about, but it's becoming an increasing factor in the Bitcoin mining space because it allows us to operate in climates that are otherwise prohibitive to air-cooled equipment.
Yeah, it's very exciting. Let's shift gears and talk about the global hash rate. How do you think that will behave over the coming, call it 6 to 12 months? Do you have an outlook there? And do you think that in this environment, you could see some smaller players getting washed out and having their operations consolidated into larger players, potentially, causing some disruption in global hash?
I definitely can. So let's back up to your first question, global hash rate. The last difficulty adjustment as a result of the increase in hash rate was like 9%. The indications that the current adjustment is tailoring towards being flat. I think that what we're seeing is a bit artificial. So you have big players like Marathon. So Marathon has I think 4 or 5 exahash of rigs that have been sitting idle for months because they've been struggling to get their hosting partner online. They've now, I think, broken through some of those barriers. And so they're energizing this equipment. And when you add that much hash rate, obviously domestically, it's going to increase difficulty, drive the hash rate up. It's going to squeeze margins. So one of the things that I've talked about in prior meetings is that our industry is almost cannibalistic. You grow to your own detriment. And so what ultimately is probably going to be the new reality is that it's going to decrease the decentralization a bit, because I think it's going to be consolidated to industrial scale mining. I think the days of the hobbyist are starting to change. It's interesting. You've been in a lot of Bitcoin mines. The form factor of the ASICs are designed around what hobbyists would use in garage mines. And so now we're starting to see that trend away. We're starting to see companies that are looking at building mining rigs that aren't restricted size-wise, but are more about efficiency and capacity. And so what that means is, the rigs that when we started in this space, we owned 3,500, 3,600 S17 series miners back in 2020. We bought those as part of the ATL acquisition. We mined with those, they paid for themselves, and then we moved those into the secondary markets because they don't have the efficiency. So I think to kind of get back to the question, an increase in efficiency and all these new rigs coming online are certainly going to drive up the global hash rate. What then becomes kind of a barrier to entry is mining pools, right? So we're with Foundry USA, and unless you're grandfathered in, you have to have a certain capacity in order to just be on the mining pool. So it's becoming a much more industrialized, institutional type approach to Bitcoin mining. So we're going to see that consolidation. There are a number of Bitcoin mining facilities scattered all throughout the country that may have 5, 8, 10 megawatts. And the challenge is that they don't have the capacity to enter into PPAs to buy at scale. So you're still faced with the exposure to global Bitcoin prices and the increase in global hash rate and the difficulty. So those margins are being squeezed. We're seeing equipment start to come offline, which is creating additional pressure in the secondary or spot markets in the price of mining rigs. So it becomes this self-fulfilling prophecy that it's driving the smaller guys out of business, and it's forcing this approach that kind of we've taken, that you have to have some influence and some input over your infrastructure and controls. And to just take it one more level, a lot of the co-location hosted companies that are hosting, thousands of mining rigs, they enter into fixed price agreements, but they may not have a fixed price agreement on the back end. They just built in enough margins. So now they're operating at a loss, and many of these companies are going public saying we're gonna get out of the co-location hosting and be relegated to self-mining. So we're gonna see more and more consolidation about companies that maybe don't have control of their power mix or their energy cost, because the fixed price agreement is, quite frankly, worth the paper it's written on, unless you're in partnership with a utility. Because if there's a third-party intermediary and they can no longer operate at negative cash flow, that agreement goes away. Now you're stuck with renegotiating. So I see a tremendous amount of consolidation, and I think ultimately there's going to be a little bit of a hiccup in global hash rate as a result of that. I think we're going to see a little bit of a decrease over the I would say probably spring to summer of next year. We're going to start to see hash rate dip a bit. I think through the winter, we're faced with some tough times. Energy prices are really challenging, and companies, miners that have exposure to non-renewable resources or to natural gas are operating at a loss and trying to power through that. But I think we're going to see some additional fallout in Q1, Q2.
Yeah, that's very insightful, and we would tend to agree. This has been, from our point of view, a tremendous use of time. Thank you for joining us today. I suppose, in closing, what excites you about CleanSpark the most in the coming year or so, and I guess what challenges are you excited to overcome at the company?
That is a great question. I would say what excites me the most, my DNA is energy. It's about the energy business, and I'm passionate about it. I have 6 kids, and I'm now a grandfather. So I feel like we have an obligation of stewardship for the planet. And I don't mean to come across as an environmentalist or any type of virtue signaling, but I think we've been irresponsible in our approach to energy management for decades. I think that this is a very unique opportunity to not only secure the blockchain, to create the next level of the web, to create more access, to be a part of the change where there's more usage of digital currency, and it's not just a hobbyist thing, that people actually use it to go to the grocery store. And I think CleanSpark's approach in creating these partnerships in the communities that we do business, I mean, it's just cool to go into a little town and have the mayor and the city council there and cut the ribbon and turn the shovel and to do the job fair and to have these partnerships and this ability to grow and to create this kind of high-tech environment in these rural communities and build partnerships there. And so to be a part of that and to feel like we're making meaningful change, it's inspiring for me. It's inspiring for me to be a part of. And I think that, the thing that we have to consider is nothing can last unless it's profitable. You and I were speaking before this about how so many people in the energy space, it becomes an exercise in academia, and it's not about execution in reality. And I think Bitcoin is really where the rubber meets the road. It's executing, it's taking a model that incentivizes this utilization and usage of a new currency, creates global access to global financial markets, and actually can deliver profits to our shareholders. I think it's the perfect storm, and quite frankly, it's a once in a lifetime opportunity, in my opinion. So thank you for the time. This has really been fun.
Yeah, well, we're very excited to see what the future holds for CleanSpark. Thank you for joining us today, and you can find this replay posted on our site. Thanks very much.
Thank you.